What's going on YouTube? It's Ganimo and welcome back to our channel. In today's video, we're going to be diving into why cash is not king anymore. So you know that drill. Gingerly tap that like button. Don't forget to hit subscribe and let's get started.
So as healthcare providers, we want certainty. However, we live in a very uncertain world right now. And there's different trade wars going on between China and the U.S. and that's causing a lot of unrest in the global economy. However, different stimulus packages are being rolled out along with slashing the interest rates, trying to give the economy a little bit of a boost. But that does not change the fact that cash is no longer king and that cash is a bad investment overall. Why is that? Well, the economic property of cash is inflation, which means that the purchasing power year after year of that cash is going to be decreasing. As such, the items that you buy today are going to be costing you more next year. And if you have a higher cash allocation, that will mean that your chances of reaching financial independence over the long term is going to be diminished significantly.
Now, cash alone is a bad investment. However, cash is used as a spending tool for many of us, and it can be used in two various ways. Number one, through appreciation, and that's through investments, stocks, and real estate. And number two, through consumption and expenses, and that's buying cars, buying clothes, buying things that you may not need. Now remember, cash is actually having a decrease in purchasing power due to the inflation index, which averages about 2 to 3% annually. So what does that mean? Well, that $1 you have in your pocket right now or in your checking account will actually be worth 98 cents over a 1-year period, and over a 10-year period will actually be worth 82 cents. So a depreciating value of cash exists. So don't think that $1 will be worth $1 10 years from now. So what can you do? You can utilize that cash that you have as an investment tool to offset the depreciating value of that dollar and actually start investing in it into appreciating assets, such as real estate, stocks, and bonds. So that $1 you have today can actually generate you another dollar in the future rather than lose its purchasing power.
So I know what you're thinking, you guys are crazy, I don't have to listen to you guys. Even very successful investors like Warren Buffett hold on to a lot of cash. Yes, they do hold on to a lot of cash, but they have a plan for that money. They're looking to purchase a lot of bigger companies that require that purchasing power of cash to be available on the sidelines. However, for the average investor, put that money to work as fast as possible because you're not trying to buy the next Apple. So even if it goes into an interest-bearing savings account where you can earn 1.5% on that money, yes, it's still losing some value, but it's still better than not getting anything and being in a checkings account earning 0.05% if you're lucky. We hope you guys enjoyed this video. What are you guys doing with your money? Don't forget to leave a comment, subscribe to our channel, gingerly tap that like button, and we'll see you guys next time.